there's been a record monthly sales for majority of the companies, but the key concern as per me, Cheryl, and what the analysts are also highlighting, that given the fact that the discounts were at an all-time high, the auto companies could boost the festive sales season. But what about the upcoming season and the upcoming festive season? How much hopes to build onto that is a bit of a concern, because it was Maruti Suzuki a while back that was highlighting that the festive season sales has been quite robust. They have recorded a double-digit growth, but in the after post-festive season sales, there could be some bit of a slowdown, and hence maybe the investors are replicating that particular commentary on the rest of the auto sales data. But keeping that aside, it has been a fantastic month, no doubt about it, when it comes to the October sales data, because look at the numbers. It's Eicher Motors, Royal Enfield, as well as the Scots, M&M Auto, as well as Tractor Division, even Maruti Suzuki, TVS Motors. Majority of the companies have done record sales in the month gone by. Segment while it was just the commercial vehicle segment wherein the sales from the likes of Eicher Motors, VECV, as well as the Ashok Leyland were below the street estimates, and hence the weakness that is a bit justified. But on the flip side, if we talk about the two-wheeler companies, TVS, Eicher Motors, Hero MotoCorp did surpass the expectation. Bajaj Auto numbers were just in line to what we were expecting. In terms of the passenger vehicle sales, after a long haul, all these companies have recorded a double-digit month-on-month growth, and that's good to see. Maruti Suzuki, M&M did record a record sales data, and Hyundai, this time we are factoring in that data as well, did record a 9% jump on a month-on-month basis, but not much of an excitement when it comes to Hyundai numbers. Tractor sales, the commentary is very much on the positive side. The companies have recorded more than 40% growth on a month-on-month basis. And lastly, in the commercial vehicle segment, like I highlighted, we did spot some bit of a weakness persisting in that particular segment. Ashok Leyland numbers were below the estimates. Eicher Motors, VECV numbers were just above that 7100 mark, below our expectations as well. And Tata Motors numbers were just in line to our estimates. So not great set of numbers coming in from commercial vehicle segment, but barring that, all the other segments have performed pretty well. But nonetheless, there's been a sharp sell-off in today's trading session. One key concern is that post-festive, how these sales data will pan out, and the other part is maybe the weakness in the markets that is also giving a push to the weakness that we are seeing in the stock, Cheryl.
Absolutely, the auto sector, in fact, the top losers today are from that pack. Let us pose the question to Gaurang and ask him, according to him, what's going wrong in the auto space and why such a sharp cut? No doubt, we've been seeing weak trend of sales. Everybody knew that they will be depending on the levels of discount that they give for the auto sales boost. But what next for the auto pack? How should one view this pack actually going ahead, Gaurang?
Well, thank you, Cheryl, and morning to all of you all. Well, the auto sales number for the month of November and December also are going to be subdued because of the fact that we are going to hit the calendar year end. And historically, the thought process and mentality is that if you wait out for another month or two, and if you buy a vehicle at the beginning of the new year, that is Jan or Feb 2025, then the value of the car gets a little bit of more tailwind positive. That's the mental thought process. Nothing changes according to me as far as I'm concerned. And because of this mentality, I think the automobile manufacturing companies also slow down as far as their new launches are concerned when it comes to the last 1 or 2 months of the calendar year. But your question, whether the investor should look at it from a long-term point of view, we as a brokerage house are extremely positive on the automobile manufacturing companies, and along with that, I think it is prudent to be positive on auto ancillary, tire, and battery manufacturing companies because they are all closely connected, interdependent on each other. So as an investment idea, we remain positive on PVs and commercial vehicle companies like Tata Motors, M&M, and Maruti. Two-wheelers, we are positive on Bajaj Auto, TVS Motors, Eicher Motor, and Hero MotoCorp. And one more company that we are positive on is a pure commercial play, which is Ashok Leyland. So not looking at the next 1 or 2 months, but yeah, if you're looking at the next 1 year, 1.5, 2 year kind of growth story, then we remain extremely positive. And there is also a positive trigger in terms of government policies for the automobile sector, which is auguring very well.
All right, so those are the factors at play when it comes to the auto sector as well as for today. There's been a weakness is what we are seeing on the majority of the counters. But Kunal, let me pose this question to you, because the fundamental factors at play we did discuss in detail. But what about the technical aspect? I would like to ask one strong candidate within the auto space and one stock which you believe could see some bit more of a weakness in the times ahead.
See, I think there are two set of stocks over here. One, of course, from the stronger names relatively is the likes of M&M as well as Eicher Motors. I think these are the two names which have been relative outperformers in this leg of correction. So by relative outperformance, I mean that the price damage to these stocks on a net basis has been a lot more curtailed as compared to rest of the other names from the auto pack. The two stocks which have been drag as well as very sharp underperformers. One, of course, is Tata Motors, the stock which has from I think 1150-70 mark, which was the high for Tata Motors, towards the point where the stock is now on the verge of retested the 800 levels. That's a stock which has fallen very sharply. Then followed by the likes of Bajaj Auto, which I think from 11,000 plus levels has also fallen pretty much on the sharper side over the last 1.5 odd months, especially post results for the stock. And then the third, which underperformer, which I think on a very recent charts has consistently dropped as well as shown signs of underperformance, is also the likes of Hero MotoCorp, the stock which is reeling below its 200-day moving average. So what's happened is that many of the stocks which have been underperformers are not just below their 200 DMAs, but some of them are significantly below their long-term moving averages. That's causing another leg of concern for many of the, or rather the underperformers from the auto pack as well as the entire sector as such.
If you like this video, then like, share and subscribe to ET Now.